us. I'm glad you could be here for this conversation about the future of the financial tech industry. A lot of people in the audience, so again, thanks so much. I'm just going to hop right in, because we're short on time, long on panelists, and they all have really, really fantastic ideas. So I'd love to begin by just talking to Aunkur for a moment. He is the SVP of Mobile at Braintree, and we'd had a couple of conversations about, old versus new, how these companies complement one another or not. How do these new financial tech companies complement what the banks and some of the old financial firms are doing? And I was wondering if you could just sort of jump into that a little bit, because I think it's a great place to start the conversation.
Yeah, so I think there's certainly a ton of disruption happening in the financial services space, as we all know. It's part of the reason that we're here. I think folks like Lending Club and Transferwise are doing a great job at sort of complementing and even transforming how banks work. I think in our space, what we're really doing is abstracting the complexity inside the banking and payments infrastructure, so that the average developer or merchant who doesn't really care about what a merchant account or a gateway is, or really wants to understand how a credit card network works, can access all the sophisticated tools of the payments infrastructure, build a beautiful commerce experience for their users, but not really have to know any of those sort of details, right? And just be able to do a very simple integration that takes as little as 15 minutes, and they're up and running. They can build a checkout experience with digital wallets and various payment types. And so I think we are one of those companies that nicely sits on top of existing infrastructure. At the same time, we also support currencies like Bitcoin, right, which are certainly trying to go around the existing banking infrastructure. And I think that sort of hybrid model is what you're going to see a lot of technology companies embrace. That's definitely the model that we've taken.
Fantastic. Now, Taavet, in an earlier conversation that we'd had, Taavet, he's the co-founder of Transferwise, which is doing a lot to enable people to make payments around the world. What you're doing sounds a little bit more disruptive than that. It sounds like more of a direct attack even on some of the older companies like Western Union. I was wondering if you could talk a little bit about that model and how you're working there.
So sure. Our goal is very simple. We're on a crusade against banks and other people who are making international payments. And we really want to make it very seamless and very transparent to move money around the world. Kind of similar to the way we're used to making phone calls around the world, whether using Skype or other means. We're used to listening all the music in the world. We want it to be as seamless and easy to move money around the world as it is to use other tech products.
Got it. So there's this idea that this is going to directly disintermediate what a Western Union is doing or what some of the bigger financial firms are doing, correct?
Yes, so, if we look at kind of the banking and financial service industry altogether, then we can see that in every different vertical there is someone who is competing with the banks. So we look at lending, and there's Lending Club. We look at merchant services, and there is Braintree and others. We look at money transfer, there's Transferwise. We look at wealth management, there is Wealthfront. So every different vertical is being disrupted by a tech company now, and I really believe that in the future we'll see a third of financial services being done by tech companies.
Got it. Kathryn, this is not your first startup, obviously. Kabbage is great, but you've been in this world for, you mentioned, almost 20 years. And I'm wondering if you can talk a little bit about the way you've seen this play out in the past, the way that you've seen new tech startups sort of intersect with older financial services company and what the outcome has been.
I think my favorite example is probably Capital One. I feel like startups either are reducing friction or getting access to a new market that's been previously underserved. And in the case of Capital One, they were actually doing both. So they sort of pioneered this online instant decisioning process, and I think they were able to serve a near-prime customer segment that nobody had wanted to serve before. And what was interesting is that the banks ultimately wound up moving into that market, and Capital One ultimately wound up moving into theirs. So now they're a full-fledged bank. So I think that's a great example of how the banks are able to adopt new technology and new practices, marketing practices, origination practices, that a startup brought into the market.
Yeah, and John, I'm curious about what your experience has been like, because before you came on to Lending Club, you were with Morgan Stanley and then with Visa. So maybe if you have sort of a personal example of how having worked in those older financial institutions has helped your work at Lending Club.
Yeah, I think it was a great experience to have had been a part of an online brokerage environment, really understood the investment community from that perspective. And then when I was at Visa, really understanding payments, the credit markets, how banks interact, I think that, for me, made it a natural fit to join Lending Club as the world's largest online lending marketplace, really leveraging technology that brings together investors and borrowers. Our mission is to transform the banking system by making credit more affordable and investing more rewarding. So I think from my experience, technology is driving that, and we're excited.
And it seems too like data is also driving that, and the way that you use data. Both you and Kathryn are doing really interesting things there. So I was wondering if maybe John, you can start since you just spoke, but if you could both talk a little bit about the way that data has transformed the consumer credit market that we already know.
Yeah, I think it's a great topic in today's day and age. Data, we use data at Lending Club pretty much to drive all of our decisioning, from the underwriting, from the risk assessment, all the way through to the customer front end. The experiences the customer has when they're navigating our website and having the experience of achieving a loan, getting a loan, as well as the investors, all of that is data driven. And as more and more data becomes available, there are many more, I think, exciting ways for us to detect fraud, as an example, to be more predictive in our credit policies. And I think all of this centers around data and the use of the information from beginning to end as the customer experiences are in web environment. It's very important.
Interesting. Kathryn?
So we serve small businesses, and frankly, Kabbage could not have existed 10 years ago, or even 5 years ago, probably, because the access to the data was not readily available. So our process is entirely automated, and we're serving a market, small businesses seeking less than $100,000, that banks have had a hard time serving, not because they don't want to. All of our customers are customers of all the large banks, but they don't have the tools and the technology to efficiently originate those accounts. And so for us, what's important is we can actually take all the same data, or generate the same data that the banks were generating manually, whether it's information from your accounting platform or from your checking account or your payment processing data, and we're able to pull that in, automate it, make sense of it, and make decisions. So we provide a line of credit, which we'd never be able to do if we didn't have real-time access to persistent data sources.
It's interesting too, how often are you able to update those data sources?
Every day.
Every day, wow. So no wonder the credit is flowing so quickly. That's amazing. And you know, I also want to sort of talk to Aunkur about this as well, because you guys are the backbone for so many companies. How has the data that Braintree's been able to provide around payments helped a customer? You know, what kind of insights are you giving to businesses and startups that are using your product?
Yeah, so I think the big way that we use data on the platform is to manage fraud, right, and manage risk. And so, you know, we work with third parties who are experts at machine learning and look at billions and billions of transactions and make those services very easily available to our merchant and developer partners. And so by way of that relationship, we're constantly helping merchants and developers with the fraud problem. I think what's really interesting is the way that companies on top of our platform, so the Ubers and Airbnbs of the world who use Braintree for payments, the way that those companies are using data signals from the device and things like that to just make a much more richer and contextually relevant buying experience. I think you're going to see a lot of that happening in the future as well.
Do you have any specific examples of that?
Yeah, so Hotel Tonight's a great example of a company that uses Braintree for payments. They are just getting smarter and smarter about you in terms of your location, trying to serve up, editorializing sort of the types of hotels that they serve up to you based on events happening in a certain market when you might be arriving. That's just sort of the tip of the iceberg that I can talk about, but obviously Lyft and Uber using location on a regular basis to create a richer experience. I think you're going to see more predictive consumption and predictive buying behavior on the behalf of merchants and developers over time, just using more signals to try to predict what you want to consume throughout the day. We don't see too many great examples of that now. Google now is an interesting application that's doing it in the content sphere, but I think you're going to see more of that in the commerce space over the next couple of years. It's going to be companies like that that are just taking more and more signals from consumers to make that kind of experience happen.
Interesting.
Yep.
I want to switch gears just a little bit, because in all the conversations that I had with the panelists before we took the stage, Taavet was the only person who talked about regulation, which I thought was really fascinating, because a lot of startups these days, they're regulated, or they're in a gray zone, or they're able to get around regulation for a really long time. It doesn't seem to be true in this industry. And I was just wondering if you could talk a little bit about the importance of understanding regulation as a very young startup.
Yeah, absolutely. So I think fintech is really a little bit different when compared to the taxi market or the hotel market, where we can see startups who are coming up and who are really getting in a fight with the regulators. For us, at least I can speak for Transferwise, we had a choice to make when we launched the business, and we figured that what makes most sense for us is to really work with the regulators and to make sure we get regulated in every market. We're also dealing with people's money, so a certain degree of protection is helpful for consumers to make sure that they know their money is safe. And additionally, what's really touchy in this area is everything about anti-money laundering and terrorist financing. So we have to follow the same rules and regulations as a commercial bank does when it comes to knowing your customer and following the anti-money laundering procedures. So I do think in fintech, the smart choice is to be regulated and work with the regulators to make sure regulation will slowly adopt to be maybe more friendly to startups. But instead of being fighting the regulation and trying to find ways around it.
Mm-hmm. I'm wondering, maybe Kathryn or John, do you have an historic view or a recent view of how maybe startups how that evolution has changed in terms of the way startups think about regulation?
Maybe I'll go. Okay, so I think regulation is critical in financial services. And so at Lending Club, we're regulated by the SEC on the investor side, and we issue all of our loans through a regulated bank. I think it's the innovation that occurs within the regulatory framework where successful startups are sort of eking out their path. And I think that leveraging technology, working within regulations to have a better model that's more efficient is where we think the successful companies will be, and that's what we focused on.
Mm-hmm. It certainly gave Lending Club a leg up over Prosper for a little while there, didn't it?
Yeah. Yes.
Kathryn?
I completely agree that it's important to embrace the regulation that exists rather than try to push the envelope. We've actually found that we moved from a non-regulated product into a bank-regulated product, and our customers were really excited about that because we were able to use language they understood, and they felt that it was a more substantial product.
Sure. I mean, I think the news went out a couple of weeks ago that Google was going to use FDIC insurance for its Google Wallet, and I think for a lot of consumers that was actually peace of mind. It was a good thing. They liked seeing that. And then, also talking about regulation, another thing that Taavet had brought up was the idea that Europe is emerging as this really big, vibrant center for payments and financial technology. Could you talk a little bit about why that is?
So Transferwise is based in London, and I think we're seeing a really big boom in fintech startups coming from London. And I think there's a couple of reasons behind it. First of all, I think London is fairly unique as it's a big financial center, and it's becoming a bigger and bigger tech center, so which is maybe a little bit unlike New York or California. So New York is big on finance, but not so big on tech. And if you look at California is great on tech, but maybe not so big on finance. So London is a place where this is coming together in a unique way. Also, if we look at the number of people in the sectors, and I believe that London right now has more people working in fintech than either California or New York. But also, if we look at regulations, and so regulation in Europe is oftentimes more friendly towards fintech activities when compared to the US. So regulation is largely unified in Europe. So you apply for a license in one country and you can use it in all countries versus having to go with state-by-state licensing in the US. So a couple reasons which I think are supporting the thesis that London might become the world capital for fintech quite soon.
Interesting. And for a lot of startups, this is something that they're not going to encounter if they start up in the US. They're not going to experience that unless, of course, they're a company like Braintree that gets acquired by a large global business like PayPal. So I'm wondering if you could talk a little bit about how that affected the business that you have, how you've helped PayPal in its pursuit of growth, and how PayPal has in turn helped you.
Yeah, that's a great question. I mean, for us, it's only accelerated what we've done. So if you just look at the pace of product releases and announcements and some of the actual numbers related to the growth of the Braintree business in terms of total commerce dollars that we published in 2014. We actually did a comparison to 2013, and the numbers are staggering, but we pretty much doubled our growth on the Braintree platform between 2014 and 2013. So the acquisition has been an accelerant for us and for PayPal. So one of the first things that we did when we got there was we made PayPal readily available to the developer ecosystem, which wasn't necessarily the case before we got to PayPal, right? And so today you can do one single integration with Braintree. You can accept credit and debit cards. You can accept PayPal. You can accept Apple Pay. Coinbase, which is a Bitcoin wallet. And so we just made it very developer-friendly and very easy for merchants and developers to access PayPal. So companies like Airbnb, Uber, Hotel Tonight, you name it, are now taking PayPal where they weren't doing that before, right? So I think that's one of the ways that we've worked together very closely. At the same time, Venmo, which is a P2P wallet that was acquired by Braintree and is now part of the Braintree PayPal family, has also grown leaps and bounds since we joined the PayPal family, because we've sort of left it as this disparate service that continues to grow. So in Q4 of last year, we did over $900 million of money was flowing through the Venmo app. So annualize that, you're talking about a couple $2 billion flowing through that mobile app and continuing to grow. And that's really the first example of, a lot of people today are talking about social commerce. That's the first example of social commerce, really, where you have a social element to people paying each other. And it's a couple $2 billion a year.
Interesting, and because of the way that you're working, you're sort of as the backbone of so many companies, you have such a bird's eye view of payment trends, of what companies are looking for, and of sort of the most important features for startups and big companies alike in terms of payments. Could you identify any of those for the audience? Because I'm sure people would be curious about your point of view there.
Yeah, so one of them is obvious, and this touches every single industry without exception, is that everything is moving to mobile, and the buying experience is moving to mobile. So Uber and Airbnb and Hotel Tonight, these great companies I've been talking about since I've been up here, these guys are training the consumer to buy a certain way, right? So if the average mobile user has 50 apps on their device, and 10 of them are commerce apps, and 6 or 7 of them work like these great companies, if you're the other 3, if you're a big retailer and you don't make the customers feel the same way, you're the outlier, right? So I think big box retail is starting to play catch up to this kind of experience. So we actually launched something called One Touch PayPal across web and mobile and across different platforms. So we're trying to make that Uber-like experience available to small developers but big merchants as well. So I think that's one of the trends that we're seeing a lot of.
Sure.
Yeah.
Sure. Kathryn, I'm sort of fascinated by this idea that Kabbage is moving also in the direction of becoming a platform. You had mentioned that you're launching in Australia as a white label product where people can use your technology and your ability to analyze data for their own businesses. I'm curious, why did you make that decision? Why is that becoming a more important part of what you do?
Well, we believe that the banks are actually in the best position to serve the customers that we serve today, because they already have access to the customers, they have access to low-cost capital, they have access to the data and to the movement of money, and we believe that there's always going to be a segment that the banks are going to be able to serve, and we can serve those customers. So in Australia, it's important for us to launch in new markets with a partner, and so we're launching with one of the largest online lenders in Australia. We're also launching in Europe in September with a pan-European bank there as well. So for us, we believe our technology is portable, frankly, and we want to be part of enabling lots of lending decisions and managing those customers, not just our own.
Got it. Interesting. I'm curious, John, I don't know if you want to talk about this at all, but you are the company on this panel that has gone through the IPO process. And I think that financial tech companies tend to be extremely transparent anyway, because people have to understand what's going on, especially if they're lending. But how has that changed the business? I ask only because it's a question that kept coming in to my email box this morning when I mentioned that I was doing this panel.
Yeah, so it's a great question. I think transparency has always been at the core of Lending Club. We've always provided all of the data for all of our borrowers for anyone to download since inception. And so that's something that we feel has been part of our DNA. And I think the IPO process was exciting, but I don't think it changed our view in terms of the value of providing transparent data for people to utilize and make up their investment decisions. So that was a natural evolution of where we already were. And now that we're through the IPO, we'll continue to provide data to our consumers and as we grow.
Great. We do have a few more minutes left, so I want to go around and ask each of the panelists, 2 questions. One, what are the things on the horizon for their companies that they think are exciting and interesting that they really want this audience to know about? And then 2, in terms of the future of fintech, what is the trend that they're most interested in right now? So, Taavet, why don't we start with you?
So for us, it's really about geographical expansion right now. We launched a business in the US about 2 months ago, and the US has become our #2 country. We'll be launching in Australia soon, and quite a few more countries in the pipeline. So that's very exciting and just growing the business in a rapid way. When it comes to where the industry is going, then I'm going to go back to what I said before, and I think to me the most exciting thing is that we're starting to see this breaking the bank into different verticals and startups doing that job much better, but we're at the very, very beginning of that. Lending Club has done a lot of lending, but if you compare it to bank lending, it's tiny. We've done more than $4.5 billion of transfers, but if you compare it to my transfer market, it's tiny. What I'm really excited about is seeing this grow to 10, 20, 30% of the market, and as I mentioned before, I do believe that we will see 1/3 of the financial services market being owned by tech companies and providing a much better service to consumers.
It's interesting. So in your world, a bank doesn't disappear, but certainly everybody's nibbling away at all of its businesses.
Absolutely.
Kathryn, how about you?
At Kabbage, we're very focused on product expansion. Through the rest of the year. I mentioned geographic expansion, but our objective is what we call fingerprint underwriting. We want to be able to customize a product for every customer who comes to our site, and so I think you'll see a lot of innovation in our company over the next 12 months in that area. And I think a company that I'm very excited about is actually Ripple Labs. I think the idea of moving funds instantly and creating a new framework for funds transfers globally is a really exciting opportunity.
So I think at Lending Club, what we're most excited about is that I think the time has finally come to transform the banking system. I think we are right now in the midst of a massive transformation, leveraging technology, leveraging exciting business models and exciting approaches, and we're excited to continue to be part of this along the way. I would agree. I think in terms of what would be exciting would be, I think if someone can figure out how to fix ACH and fix the way that money is moved within the US banking system, that's ubiquitous. I realize there are a lot of technologies where you can move money in real time, but I think that ACH was built 43 years ago, and I don't think it's really ever changed that much. And as new technologies arise and they become more ubiquitous, we'd be excited to provide real-time. Lending Club's not going to fix ACH, but we'd really like to see that kind of service evolve. So maybe there's some startup out here that can get that going.
Taavet's smiling. Do you have any ACH thoughts?
No, I mean, I totally agree with it. It's a huge pain in the backside. And that's something where I think US is, again, lagging behind the rest of the world in a major way. In the UK, we've had a fast real-time payment network for ages. And similar in many other countries. I'm just constantly surprised why can't the US get its act together.
Awesome. And then Aunkur.
Yeah, so I think same thing for us. International expansion is really big. We actually launched in Asia 2 months ago in 3 markets. Braintree did. So in Hong Kong, Malaysia, and Singapore. So we'll continue to expand there and bring sort of all the tools that we have for many years to all the startups in those markets that are just waiting for something like our platform. In terms of macro trend that we're excited about, I agree with John. I think banking is really changing. I think the piece of it that's exciting to us is this idea of tokenization of credit cards, right? So I think that's the piece that's very relevant to our business and our merchants and consumers, is the idea that the 16-digit credit card as we know it is starting to migrate to something else, which is much more portable and much more usable and much more secure. So I think that's going to have all kinds of really interesting use cases for merchants, developers, consumers, certainly on mobile, which is already happening today, but in the offline situation as well.
Great, this is so fantastic. Aunkur from Braintree, thank you for joining me.
Thanks.
Taavet from Transferwise, Kathryn from Kabbage, and of course John from Lending Club. I'm Katie Benner, and I'm here from Bloomberg View. Thank you so much for being with us here today.